Hey you guys, I'd like to welcome you back to my channel, and in this video we're going to talk about market structure basics. Now in the previous video we talked about the three types of structure. You have an uptrend that produces higher highs and higher lows. You have a consolidated range that produces equal highs and equal lows, and you also have a downtrend that produces lower highs and lower lows. So in this video we're going to look at the live market and kind of look at some examples and see exactly how the market moves in real time. Okay, one of the things I want you guys to understand is when we're looking at market structure, we want to make sure that we concentrate on the wicks here. So we want to look from wick to wick when we're looking at market structure, because the wicks represent the furthest point in price at that particular time. So we don't necessarily want to concentrate on the bodies. We want to look at the wicks. The second thing I want you guys to understand is price must pull back outside of the previous candle's range, and I'll explain that to you guys and what I mean by that. And third, last but not least, it must be at least a 2-candle pullback to validate the retracement. Okay, so let's look at this. So let's say that we're looking at this point here. Let's just say, well, this one here. Let's say this is our initial low that we're looking at. So from here, as we can see, we have a high here. Now, what does the rule say? We want to look at wicks. So we see wicks to the downside here, and also we see wicks to the upside. Now the second point says price must pull back outside of the previous candle's range. So when looking at the previous candle's range, we can see that this was the last higher high from this leg of structure here. And as you can see, price pulled outside of this previous candle's range. It broke the previous candle's range. And from there, this leg of structure gave us our next higher low. Okay? So wick to wick, we're looking at the wicks. And part 2 says price must pull back outside of the previous candle's range. This is the previous high here. Price broke that point, and then it came back and gave us this leg of structure, which gave us our higher low. Okay, so let's look at the next point. Now we can see price has broken up to this point here, and price is giving us a wick, and we've gotten a pullback here. All right, so this leg of structure, it broke the previous candle's pullback, the previous candle's range, which given us our next higher high. Now some of you may say, why isn't this point here our next point of structure, our next higher high? That's because, as you can see, there's no pullback here to actually validate this particular point here. And as you can see, price actually pulled away from this point, giving us our lower structure here. It has to be at least a 2-candle pullback. So we have 1, 2, 3 candles to pull back to complete this leg of structure. So when we're looking at this, this leg pulls up to this point here, which give us our higher high, and it pulls back to give us our higher low. Okay. Now let's continue on. So let's make sure we notate this. This is our last higher high. This is our last higher low. Now this leg of structure here pushes up, impulse to a new high here. Now some of you may say, well, that's bodies, but if you notice, we have wicks. We have wicks on these 2 candles. So from here we get an impulse leg down to a new low here. And from there, price gives us a new high, which breaks the previous candle structure here, giving us our new high. And then from here, price breaks down. Now, this is where we actually see a transition, you guys, because this is our last structural point here. This is our last higher low here. But as you can see, we have a break of structure in this area here because price broke past the previous higher low. Now, when this happens, price is going to give us a pullback to retest this last area here, this last structure area here, to confirm that we're going to break through and that the trend is actually changing to a downtrend. Now, this point here would be our next possible lower high. It's not confirmed until price actually breaks this low here. So it has to break past the previous point, okay? The previous candle's range. So now this here would not be considered as our next lower low because, like I said, it didn't break past the previous candle's range. So this leg of structure here, which broke this last low, give us our valid lower low. So now we have a lower high and a lower low. We got an impulse down to this lower low. Now it pulls back, 1, 2, we got a 2 candle pullback, which gives us our lower high. And then this candle here breaks the previous candle's range, giving us our next lower low. Then we have a 1, 2, 3 candle pullback, which validates our next lower high. And from here, it impulses to a new low. This is the furthest wick that breaks the previous candle's low. Okay. Now, let's go ahead and recap, you guys. So, going back and looking at our rules, when looking at market structure, we want to make sure we concentrate on the wicks. Like I said, from wick to wick. Wicks, wicks, okay? Wick to wick. Price must pull back outside of the previous candle's range, meaning that if we have a higher high here and a higher low, the next structural point must break the previous candle's range, okay? So it broke this range here. And then it must be a 2 candle pullback to validate the retracement, meaning that in order for this to be valid, it must be 2 candles from where the highest wick is. So we have 1, 2, 3. So this is a valid retracement to validate the structural leg here, okay? Hey, you guys, I want to thank you for watching this video, and I hope this was informative to you. I'll see y'all in the next video.